The relative equal highs, that was the draw on liquidity. Now, the draw on liquidity does not need to be traded to have a profitable framework or setup. Okay, so what do I mean by that? Well, if we're below this objective, and I'm thinking, and if it was you thinking the same thing, if you think that the market's going to draw up to that level, whether it be today or into next week, you look for a setup that will allow you some kind of participation in this expansion towards that. It doesn't need to get there, as you'll soon see. We're going to drop down into the hourly chart. All right, so here's the hourly chart. You can see relative equal highs up in here. Look at the high of that candle there. That's the 12,553 and a quarter level. Okay, so that's what I'm framing it on. And we traded down, started to run higher with a shift in market structure here. And then just notice how we have had this low, swept. We came down below it, came back above these relative equal lows, and then we came back down, tried one more time to go lower, and then rejected it. Notice that? So as the market's starting to trade higher, where is it likely to go? Well, we've already taken out a large pool of liquidity below these relative equal lows. This is sell side. Okay. Now we're back above these relative equal lows. So where's buy side? Clear and obviously right here. Okay. Not really obvious in terms of any imbalance in here because we already rebalanced this area there. So there's nothing really all that exciting except for that small little section there. So if it's going to go up to this area here, my thought process is that it's likely to probably just punch through and take the buy stops resting above here. So that's the draw on liquidity. Just think of it like a big magnet drawing price up towards it. Okay. So we're going to drop down into a 15-minute time frame.
Maybe we should track all our cars' value on Carvana.
All of them?
All of them. We need more trackers.
All right, so here's the 15-minute time frame, and here's Friday the 13th. You scared? I ain't scared. So we have the market trade here, lower, low, low. So this right here may trip you up, but this right here was the 9:30 in the morning manipulation where it takes out this overnight London low, creates the manipulation idea, then rallies. I was not available during this time, so I didn't take any trades. As you'll see, there's no trades in this area. And then the retracement in here in the afternoon, that's what I was looking for. So I wanted to see that type of idea. So I'm going to add the annotations to the chart now. All right, so here's the 5-minute chart. And here's the overnight London lows. 9:30, we run through it, taking out the sell side here, and then it starts to rally. All this rallying up here, I was not able to participate in. The market trades lower, down into the range between this low and this high. What is it trading to? Discount. So I'm going to go into this area a little bit tighter. Okay, so we can see here's our consolidation. It drops down, creates the low of the day, power 3. So it's accumulating long positions, manipulating early longs out of the market, taking out the stops overnight, then rallying, and then I'm looking for the continuation up to take out the relative equal highs here because I think I'm still going to see continuation in the afternoon. So I want to buy this discount market, and I'm going to be buying inside of this fair value gap because it's at or below equilibrium between this low and that high. All right, so I've added the annotations here, and I got to adjust this because my obsessive compulsive disorder is flaring. It's like a spider sense, folks. Can't help it. All right, so we have the New York session open at 9:30 in the morning, New York local time. Creates the low of the day, rallies, creates the high here. At what time? What time is this candle here? It's 12:10. That's that lunch time. Remember I told you it creates usually a retracement of some sort or consolidation. Then it retraces lower. And then here is 1:30, right about there. So at 1:30, the algorithm will start seeking liquidity. If it's going to continue higher, what's it likely to do? seek sell side. So where's sell side? Well, we have relative equal lows here, but is that a discount from here to here? No. So this dashed line here that's in purple, I have that noted as equilibrium. That's essentially the same thing as if taking the fib from here to here, and that's 50%. Okay, so now we have equilibrium there. The market drops down into equilibrium and then below it into the fair value gap here. This candle's high, this candle's low. That's your imbalance. Fair value gap is here. So the market drops down into it here at 2 o'clock in the afternoon, 2:05, 2:15, 2:20, 2:25, and then displacement. Okay, we'll see this fair value gap on the lower time frames. I'm going to go through and let you see it, but this displacement on the outside is a shift in market structure. In a day that's likely to be bullish, is counter trend to a higher time frame, we're working with the logic that it's probably going to be a retracement because we've been down for a long time now, and most people are probably going to want to get out over the weekend. So the algorithm's going to start squeezing on them to get their positions squared before the close of the Friday. So in this area here, we're going to drop down into a 4-minute chart. Okay, no fair value gap shown here except for this small little area there. Now by itself, that's possible. You get a small little return into it there. I'm not looking at that. Okay, go down into a 3-minute chart. Okay, there's a gap there. Again, you can see that candle right there. That would be fine if that's what you were looking for. And then 2-minute chart. There is. Gotta set my chart back. It's gotta be the way I want it, folks. All right, so we have down closed candles in here, order block, fair value gap. This candle's low. This candle's high. There's our imbalance. Order block. It trades down, drops into that. And I'm going to show you the executions here. So as it's dropping down in here, you can see I have, hover over top of this thing. I bought 36 contracts, and the assumption is we're using a discount broker, something like AMP Futures. I'm not repping AMP Futures, by the way, but they have really, really low margins. So that would be allowed for something with the equity that was used in this example today. These are paper trades, so you guys know for compliance reasons and full disclosure. I'm illustrating execution and theory. Okay. I'm also showing you what I was doing when I was on Twitter, when I did use MT4, which I don't do anymore. I haven't used MT4 in years. Okay. I don't need to have a fake MT4 server to be able to do this. Okay. This is what I was doing, and I was trading it and building it up and building it up and building it up. So in a matter of a week or so, I've taken a $100,000 account, took it to over $300,000. Okay. And you'll see that here in a second. But, as it was dropping down, all this candle here, I was buying at the beginning of the fair value gap and about the middle of it, and I was trying to get into the lower portions of it, but it didn't quite get down there. So the fair value gap in this shaded area, that's what's being shown here. Take that off for clarity's sake, and we drop in here. I mentioned in the small little vignette, again, I've done 3 videos today that were basically silent. I put a little bit of a music thing on it just to, I don't know, I was testing it out. I was really disappointed it didn't play the entire time the video was playing, but whatever. The idea was I was showing you that when we went into the order block that it was going to rally up. Okay. And it rallied up, and then I took off 10. A small little vignette shows me closing 10 contracts there. And I was looking for it to maybe stage a run up into that 12,553 level that I mentioned on my community posts. Okay. But obviously we were running out of time today, and I messed up on the close of the 20 contracts because I wanted to take off 20 above here, and I tried to put it in as a limit order but it ended up closing as market. So what I should have done was, and I said this to my private group too, I'm working with TradingView, but I'm used to using actual live platforms. So